Alright guys, what's up? Got the daily chart right here. It's Friday, May 29th, 2026. Going to do a quick review of today and talk about my P&L. So, since today was Friday, this was the open of the week because there was no Monday because it's a bank holiday. I would normally look for TGIF characteristics, which we got. And actually, let me go back to what price action looked like before 9:30 on the daily chart. Okay, that still looks really off. That looks so off. I don't know why it looks like that. It's because it was like, that's what it was like. Because I had to exclude Friday. I was supposed to include Friday. So from open of the week to the highest point of the week before Friday, mark that out. Get the 20 to 40% ranges, including 30%, and TGIF will retrace. These will be heavy draw on liquidities if the conditions are present. And we did get that right here. We retraced down to 20% of the weekly range. And then when I was doing my analysis, I just went down in time frames. Like I went to the 12-hour right here. I didn't really see anything pertinent until I don't actually remember when. Maybe the 4-hour. Maybe 1 hour. I don't think that's what's. I don't know why replay trading isn't working properly. That's This thing sucks. All right. So on the 1 hour chart, hold on. Here we go. This is what it's supposed to look like. So right here we had this was all-time highs. This was also Wednesday's high. So ATH previous 2-day high was this. And then let me go down to the 30 minutes so I can see sessions. Here we go. So price opened up. This was kind of my thought process. Price opened up at about 6, right? So right here we went down and we tapped into this. We swept this liquidity, and because we're so bullish right now, I was able to anticipate that this, like as I was looking at this, I thought, okay, this is probably enough liquidity. This is probably also going to be the low of the day for now. It might go reach down there afterwards, but we're probably just going to go into all-time highs for a little bit more. So that was my initial bias. I think maybe we go down later, but I don't really care about that. I just care about what we do at 9:30 mostly, and that was probably go up. And so we went down there. I considered that was where smart money had entered most of their positions, right in this area. Now, then I went and looked for, okay, where did we sweep trailed stops, and went up. None of these are swept. And then right here, we had another retracement and made a higher high, and that was the most recent one. And we also made it relatively equal lows. Made a higher high, blah blah blah. Noon went down after sweeping Asia high and getting near that. Retail had their stops right here. Smart money pushes it down, sweeps them out. Um, so that means that this low, to me, this low for now, at least before we go into all-time highs again, beyond this red line, this low is protected. So then I looked like we're not going to sweep this low. And if we do, I'm completely off bias and I'm not trading that day. So we go up more, create these relative equal lows, show the stops below there. Then that made a higher high right here. So retail now trails their stops below here. And then we swept out the trailed stops right here. And then even farther, which was really good for buy side, we went down and swept the part that swept the trail stops, which is a Judas swing. So now I'm observing price action. So I hopped on the charts around like right here. I'm observing price action, and I'm thinking, okay, this low is completely protected. I don't want, same thing with this, like same thought process over here. I don't want to see this one be swept at all. If we sweep it, I'm not interested in trading today. We can sweep it later on, but first, I just want to see price go up to here because we're so close to all-time highs, relative equal highs with all-time highs. And this liquidity pool is not going to work. So then that may want to look for longs within this range. And there wasn't really any kind of, let me mark out OTE levels. Right in here, we didn't have anything, any really obvious trailed stops from down here, or like on the sub 1 minute, for example. We didn't really have much except for right here. But I would usually like to see price retrace to a minimum 50% of the range before higher prices. So I wasn't inclined to long at this. But I also, when I was trading this, I also noted that we had trendline sell-side liquidity from right here. I honestly don't really know too much about trend lines, but I know that we, like right there, so once we go down and sweep this and this, that's a good amount of liquidity. But like I said, I wasn't looking for longs, I was looking for something deeper. But deeper retracement maybe just at minimum 50%, this red line right there, which we didn't end up getting. So I didn't look for any longs over there. We also had stop losses right here because breakout traders, retail breakout traders, once they see this high or this high broken right here, some will long. I guess more the aggressive ones will long right here, like at this candle close. If it closes above, they'll long. And their stop loss, I don't really know their stop loss placement originally, but it went higher, so they're in profit. So that means that they put their stop loss to break even, and if not to break even, then they'd trail it up to here once they see it go higher, which it did. So I guess actually now in retrospect, it actually makes sense that this liquidity was enough to push price up higher, because we swept the trendline liquidity, we swept just this original liquidity, so anyone who buys down here, and using trend lines were swept, and anyone using breakout strategies right here, they would trail their stop losses right to here, putting them a little bit in profit. So I guess I can see why that was enough. And we had a overall bullish narrative, and we got a Judas swing right here. So that's enough. I don't really need, retrospect, you don't really need that. But I didn't notice all that stuff then at that time. So I was analyzing the market right here and waiting for this to be swept. Then we went down and sweep it right there. And this is a little bit early for my model. Normally it doesn't appear until like within 5 minutes of 9:30, or like a few minutes after 9:30, or at 9:30. But it appeared right here about 10 minutes before 9:30. I'm pretty sure this was the one that caused it to go up. I didn't take this long. I'm just going over what my model presented and how it worked. But we got that inversion for value gap. And all-time highs right there. I was considering actually shorting somewhere around here, but then I decided against it because I did some back testing yesterday, and that helps me understand, like get more in flow with the market a little bit better. And so I didn't short this, which I'm happy I didn't, obviously, because I would have been stopped. I would have just been shorting it down to like right here because we didn't tap this level. But instead I decided to wait for longs. And let's play this out. And I took an entry right in here. And I gotta mark out the thing that I took it off of. So right here, same method I've been using for the past couple days. This red line was the previous 2-day high I showed on the daily chart a little bit ago. Then I take consequent encroachment of it. Or no, it's called something else, called event horizon. 5-second chart. Go in here. And we made this low, then I saw we went up. Then we retapped it. When we retapped it, I took a long entry off of this. Pretty much right there. Stop loss right here. And I didn't have a take profit because this was all-time highs. And I'll get to where my take profit was later and why it was there. So it was just somewhere up here. And play it out. Let me see the 1 minute. Yeah, okay. So I don't remember. It got very close to my stop loss and invalidated what I wanted to see be respected. I do believe I took a partial, like I think like right around here I took a partial, which was good, secured some profit. And I think we got like down to there. Yeah, so around here I had this order block and I didn't want to see the lower half of it be disrespected at all. Maybe it was on a higher time frame. It was on a like 15-second or 30-second. Yeah, I think this was it. Maybe this was a 30-second. No, it looks like a 15-second. Alright, so right here. Yeah, at this candle close below consequent encroachment, and I wanted to see at this moment, I want to see very, just really bullish price action into buy side. So with that context, normally it'd be fine if we close below consequent encroachment, but I wanted to see low resistant price action higher, and we closed below consequent encroachment, which is an indicator that's bad. So what I did was I exited like right here, like somewhere around here, for a loss, and I just told myself, well, if we start to go back up again, and then we re-respect consequent encroachment, and then we go higher, then I'll look for entries. And I don't. We started to go higher. I wouldn't have been stopped. My stop loss is right here. And I believe my entry. Yeah, so I just went out to the 1 minute chart because I was thinking 2 days ago on Wednesday I did the video where I went over how I trade just low resistant expansion to the buy side when there's no breaks, there's no retracements that I can enter off of or anything like that. It's just constant expansion. And right here was one of those. I didn't go over this confluence, but we had one of them that I noticed. This was an order block right here. After this traded up to here, that was an order block. And right here, we went down and retapped. Looks like near upper quadrant of it. And then we started to go higher. So, which makes this, because this isn't the original, this is the parent order block. And it makes, when this candle right here reacts well to this, and then trades higher, this isn't become an order block, this is a propulsion block. So it's like the child. This is the parent order block, this is the child order block, or a propulsion block. And propulsion blocks have very specific tendencies about them. So I placed my long order slightly above there. My stop loss was right here. And I targeted it to the big 500 level, which was a confluence. And I'll get into that in a second. And then I just waited for us to go back down. Right there, got entered. And so with propulsion blocks, if we're in a very bullish scenario like this, and we're one directional, we should be one directional at least. I don't want to see price action retrace at all. I don't want to see it have any big retracements. I just want to see it have overall just buy side. So I was able to take this entry right here, and if I shouldn't see any wicks go below consequent encroachment of the propulsion block. If a wick goes below consequent encroachment, then it's invalidated. Or maybe it's a body. I'm pretty sure it's just a wick. That's how powerful these are. So you don't want to see even a candle or the wick of a candle go below equilibrium. And then, so I just took that entry, and nothing, that was the lowest that it went, didn't even touch equilibrium. And then we went to take profit shortly after that. And the reason I targeted 30,500 is because smart money knows that certain banks and like funds and hedge funds and whatnot, they like to do certain stuff at very specific levels in price, at least in all-time highs. Because I have no confluences up here unless I did standard deviations from one of these things, which I don't really know. I never really studied that. Except for at a big, like very bland level like this, so 30,500. Just like a big number. 30,700. Even big even numbers that like not like you wouldn't choose 30,558 and a half. No, you'd choose big banks when I would choose this one. So they use that against them. And so I said that my take profit right there. I had no idea how high it was going to go. I took a few partials inside of here. Just a few partials. And then I trailed my stop loss up as well. So I believe once we close this candle, I move stop loss to just above half because I don't want to see it go below there at all. Then we went to a little bit higher, maybe like right here or something. Maybe it was right here actually. Oh wait, no, on the 5-minute chart. Because remember I switched to the 5-minute and I saw that we had an immediate retest right here. It's gonna close, leaving no fair value gap. So I moved my stop loss up to this low right here. And then as we went higher, I believe, after I saw this institutional order flow entry drill, I moved my stop loss. I might have been aggressive with, I think I don't know if I moved it right here or like right here. Might have been right here. And then I just let it run to take profit. And later on, price started to wilt near the 500 big figure level. I think Koa caught a short around here. Shout out Koa. My #1 viewer. And I also want to go over this. Actually I don't need to be in market replay for this. So at 11:30, lunch macro characteristics is that at specifically 11:30, right there, you go back and you find 10 a.m. right here, 10 a.m., and then you trace all the liquidity that is made. So we still have very obvious sell side to take out right here. This low, these relative equal lows, really obvious. Then 11:30 a.m. hits, and then we have this really obvious buy side liquidity right here for relative equal highs, and they are going to act as the propulsion for lunch macro. And not only do we have those relative equal highs, but it also aligns with the first presented hours gap. So the high to the low for the first presented hour of trading, regular trading hours. Right here. Equilibrium of that gap. Quadrants as well. So equilibrium is right here. And they align very well. So lunch macro doesn't always have to retrace to the nearest liquidity like this. It can also just retrace to consequent encroachment of the first presented hours trading range gap. And it did both. And then we had this, actually I think I used the 2-minute fair value gap. I didn't take any trades off this because I don't trade this time. And I was doing something else. But I just saw it happen in real time. I thought, oh, that's a good trade. So went up, swept that liquidity. Swept the relative equal highs. And then we dropped off from there. Went down, but we still have these relative equal highs, which I think we might attack later. I don't know if we're going to get them before we sweep these out, but also something that I saw which was interesting was from London low all the way to this low, so area between those two lows, take event horizon between the two, this equilibrium between the two lows, and that's exactly where price reversed. The bodies could not go below that at all, and I think that's how smart money creates relative equal lows to trap retail, is they just use equilibrium between the two primary lows that they want to use, and then they reverse off of that. You can also use this for like two different confluences. So say you have like a fair value gap here, something up here, and prices between them, like say it got up into there. You can also do this as long as they're the confluences that they're actually going to use. You can use event horizon between them as well, and this is a new confluence right here. I just thought that was interesting. But yeah, total P&L today was plus 412. And yeah, all right, later.